So what you're looking at here, you're looking at the potential level where we can expect to start selling. We can start.
I forgot to.
Yeah. So if you look here, we can expect something. Now, many people here, breakout traders, can make a mistake. Since the market has formed another candle on a daily time frame, they go, oh my God, it has momentum. Others, they use and determine the prediction or the future of the market looking at the strength of the candle. This can deceive. This is the reason why technical analysis is better, because you won't just be doing things, you'll be doing from the perspective of understanding and knowledge. So again, if we go on a 4-hour time frame, this is what we are looking at. 4-hour, the market is already started consolidating. Remember, this green marker is a representation of the bearish order block that we saw on a daily time frame. Others may say, oh, if a new candle forms above, it will be a break of structure. Well, we just have to be patient, because what if the market is just trying to wipe liquidity by trying to reach at that level, that zone there? What if it is trying to reach there, immediately even reject, wiping out, taking out liquidity, and then start pushing down? So we have to consider that. This is the reason why if we go on a 4-hour time frame, here, there is no reason why you should try to enter there. Number one, don't enter just because the market has reached on an order block. Number two, don't enter when you see the market making bearish or whatever the direction where you're expecting. When are you supposed to enter the trade? Number one, remember to enter the trade when the market has finished creating patterns. Very important. So let's say here the market comes, it starts coming like this. Don't enter still, wait. Don't enter still, wait. Again, the market reaches there. It will create either equal highs or a little bit like this, head and shoulder, like that. And once it is done, don't enter still, wait. You will see something like this. Prepare now to sell, because now the same principle, just like the human being, shoulders must not be equal with the head, like that. So in simple terms, this is going to act as a higher high or high of the day. This works on gold. Even on gold, if we go on gold, it is the same thing. The same principle works on gold. The same principle works on synthetic indices. If you look at gold, look, you're looking at the head and shoulder pattern there, there. So now look at this. Here, we're not just going to be randomizing things like everybody else, but we'll be doing it with understanding. This head and shoulder us will also be seeing some broken structures. We'll also be spotting order blocks here. There is this bearish order block there, which means we'll even be able to understand the reason why the market had to reject there and drop. Also, you will see that this level here also was broken. I'll use black. The black level of demand was broken, the market came down. So when the market pushed, this black previous demand, which was broken, became a swap zone by start acting as a level of supply. So we have a bearish order block plus the swap zone. And plus, if we try to use a Fibonacci retracement tool, we will drag it all the way up to the down level here. You will see that we are going to have confluence of factor. Okay, this level here, bearish order block, is 0.78. Or if we want, we can adjust and put it here. There. This low here and that high. You will see that still 0.618 on bearish order block. 0.5 here. The previous level demand now here also made the market to drop. So you will see that the same principle works on anything. Let's try NASDAQ as well. Okay, let's try.
Sir,
Mhm,
Sir, on this 4 hour, it is making the head and shoulder, but we are
mhm.
supposed to make our entry on the 15 minute, right?
Exactly. So this is a 4 hour chart. Now we have done
So,
well.
so how will
Let's
you go down from this from here?
so let's go on a 15 minute. I mean 1 hour. So look at this. If I delete everything, we say, okay, let's focus on the present. These two
Okay.
can give you some good money. Let's say you're even lucky you're trading a proprietary trading firm, okay, prop firm account. So here you will see that this is the level of the bearish order block. It dropped. Then the market went back up. So let's say you just want to say, let me scalp few pips. You even enter a 2 standard lot size or even 5 standard lot size. You're using a prop firm account. You can make some few bucks there. All right. You can make some few bucks there.
Okay.
Why? Because number one, you won't be doubting. Why? You understand the principle of what is happening on the market. Okay. Let me tell you something. These people that you see making a lot of money on YouTube, they don't stay for far too long. One, they take advantage of the capital that they have, the lot size that they have, and they make sure that their entry points are sniper entry and on point to the extent just few pips, 3, 4, 5 pips, they make a lot of money and they are out. From the time that I started trading up to now, I've never seen somebody who makes a lot of money enter a huge lot size and try to stay for far too long in a trade. Unless you say, okay, I'm willing to risk a $300 and then you enter. You even know what you're doing. Okay.
Hmm.
Exactly, 5 lot size. In fact, I'm going to show you how I enter myself. I don't enter below that when I'm trading my prop account. Okay, so
Yeah.
you cannot enter a 5 lot size on a small account, like especially a proper trading firm account like a 10K. No, I'm talking about 100K going up, okay, or a 50K going up. Trust me, you can enter. And if you can just have a target, you enter from there, okay, that is almost that is 894 pips. I mean 894 points, okay, which is, let's just say, 89 pips, because this is gold, is different from currencies. Okay, so
Yeah.
that rejection, if I take you on a 30-minute time frame, you're going to see, look, this is 30-minute time frame. Why? Because order blocks are perfectly fine and they work. If I take you on a 15-minute time frame, look, this is a rejection. If you calculate from there to here, that is 654, or let's say 65 pips. Here, it reached down here. That is 1,316 points, which is 129 pips. This is good. So, which simply means that you can, please, I'm not saying use bigger lot size. That is to your own discretion. But that is what most people do, and that is what I also do. And I'm not encouraging you to do the same. Do the things that work for you. Okay? Do the things that work for you. But um, if you try, you come to understand how these things work, the structures of the market, you come to see that it works on everything. So, like this principle that I'm telling you, it works on crash and boom. Let's say you see that this is crash 1,500. It is approaching the bearish order block. Don't even doubt. If you see this on a higher time frame, starting from a 1 minute, 1 hour like this, you see crash reaching there. Start selling immediately. You start seeing some spikes and the market will spike. Okay, let me try to see if I can show you on deriv a synthetic.
Yeah. Wix
Let's
charts
try.
or something like that.
Okay, trading view implementation. Okay, all right, let's try
So
to
it's
see.
charts.deriv.com.
Okay, so we are here. on TradingView implementation. Okay, so let's try to say we want to do something. Let's say VIX. Okay, here. So let's say crash and boom. Crash 1000 index. This is on a daily time frame. So if you look here, guess what? I've forgotten. Let me add some tools. I'll add this one here. I'll also add horizontal line, real horizontal. Yeah, for now, these are enough. So here, if you try, you mark there, you also mark this level here. This is on a daily time frame. So we will now, let's shift to 4-hour time frame from a daily time frame. So guess what? So the moment these two blue lines are for the daily order block we saw. However, even here, we are going to see that there is a separate level of order block in red. This one on a 4-hour time frame. So the moment Crash 500 reached this bearish order block, it started dropping. Again, the moment it reached both the 4-hour and the daily it entered, it started dropping. So if I take you again on 1 minute time frame, excuse me, you're going to see something else as well. So on a 1-hour time frame, if I delete all this again, you start afresh, 1-hour time frame, like this, like that. So you discover that you could have entered a sell on Crash 1000 index. You could have caught some spikes. Also here, you could have caught some spikes. It is the same principle, please. It works on anything. It works on anything. The same applies if you try on boom. It works on anything. Let me show you also. Let's say you want...
They're actually marking the order block, that is the institutional order block. That is the, I think, main skill here we should learn.
Exactly. Because
not every opposite candle is a order block.
Exactly. Because order blocks, number one, they are supposed to break the structure. Now, for instance, here, if you look at this one, here, the market moved for about 2 hours and then it reached here. So this one didn't break the structure. What broke the structure is this one.
Yes.
It is this one. Yes. Okay? It is this one. Now, here, if you are to apply a simple principle, you add another level of the previous level of demand. Also, it is the same level that was broken here using the order block. Also, it was a demand here, also broken here, supply broken. So this is a powerful level. Now, if you say you use this order block, we are going to call the market, since it has broken above, we are going to call this as a level of manipulation or stop hunt. The market pushed a little bit above and then started dropping. And once the market dropped, it tried to push back up, it started dropping within the 1-hour order block. But if we go back on a 4H time frame, like this, you will discover that this here is the order block. So in simple terms, the order block that you may see on a higher time frame may not be the same one on a smaller time frame. So we are going to say on a 4-hour time frame, this order block held. Whatever it is that we are seeing, the wicks, these are stop hunts, stop hunt high, and then the market started to drop. Let me show you something as well. I want to show you something. If I also go on cryptocurrencies, let's say BTC USD, we take this one as well. I'll also make sure I will add this one on so that if you look at BTC USD and then we go on a daily time frame or 24 hours, this is what you're seeing. Okay, because I'm expecting BTC to drop more. Here they try to push the price here, but what they found, let me add another. I add another. Okay, rectangle. Okay, so if you look here, you will discover that this is the chart, the structure, which was broken using this bearish order block on BTC USD at the price of 96,000. So this level here was the level of demand. It got broken. So now this order block on a 24-hour or daily time frame, if the market reaches here, we can still expect some rejections. Okay, you can expect some rejections. So let's say you are planning to buy BTC, and we are on a 24-hour or time frame. If I can mark, this is a very, very big structure, people, very serious one that we don't have to take lightly. Trust me, I am expecting in the future BTC will reach at that price of 70, which means those people asking, oh my God, I missed this move. When can I buy and then exchange my USDT to BTC and then hold as they appreciate in value? You can do so once it starts approaching the price of 70,000 to 60. Because here, there is an order block right there. There. So which means the same strategy that I'm teaching you is not just about placing trades. You can also use it to analyze when you can use and buy a certain crypto token. You use it to store your money or as a store of value, which simply means that we won't be just buying cryptocurrencies anyhow. We will be using the analysis in order for us to understand when to buy and when to sell. I remember there was a time when Solana dropped so much to the extent that I analyzed everything before and after in my course on cryptocurrency. You understand that later on it moved, it dropped exactly to the price of should be $70, and then it started pushing. You know, it is the same analysis, which means that also you can apply this principle to also know and understand when is the right time to buy or sell a certain cryptocurrency. Okay, is it making sense, people?
Yes, sir.
All right. So any questions before we end? Doris, any question?
Not at the moment.
Okay, and you got surprised when I mentioned something like you can use a 5